wahala, learning activities, my children.
I've been so now waiting make us they work.
My children,
that's
two of them fall sick.
What's in do that?
They fall sick, malaria and cold and all this thing.
No.
Yes, sir.
But now they are
Yes,
getting
sir.
better.
Yes, they are getting better now.
Good. For the accounting, there's petty cash book in that thing I just discovered. But just go through it. It's not a difficult problem. When we say petty cash book, it's still a continuation of cash book. Take note. But is that cash book that records small transactions? Are you following?
Okay, sir.
And it's being kept using two systems. One is impress system. The other one is what we know as double entry. Abi?
Okay.
That impress system simply means a cashier, the one that keeps cash book, will give money, an amount of money to petty cashier. That amount of money given to the petty cashier is called a float. It's called what?
A float.
A float. So FLOA, which is the one you read, you see. It's called a float. From this float, the petty cashier is allowed to make small payments out that is less than the float. Let's assume the float was 100 naira. Are you following?
Okay.
The petty cashier is allowed to make small payment that is less than 100 naira. Let's assume the payment he made was 18 naira. Are you there?
Okay.
Out of that 18 naira, what remains is 20 naira.
No.
This amount that remains, and this is the amount that was paid. This amount that was paid will be reimbursed. Reimbursed. REIMBURES. So there will be a reimbursement of the 18 naira, so that when we add it to the remaining 20 naira, it will be 100 naira back. That is getting back the float. Is that okay? Okay,
so that means the reimbursement is coming from the main cashier.
The main cashier will reimburse because now your guy, the boss, is the cashier.
So there's a time duration for this, or is it on a daily basis?
No, it could be daily, it could be weekly, it could be monthly.
Okay, so that means they will just check how much you've spent and reimburse you.
Yes, they check how much you spend, what remains. It is that amount you spend that they're going to give you back, so that you can go ahead and continue making payments. So it's a way of checking fraud and the accountability and so on. Is that okay? And that principle is called the impressed system. The impressed system. So petty cash book is the only book, only account that uses two systems at a time: impress system and the double entry system, or the double entry system. Is that okay?
Yes, sir.
So what you will see them talk about, they may not tell you to pay it. You may see it in the objective question of accounting. You know, the exam you are going to do is made up of both objective and what theory. Is that okay?
But some of the past questions I'm seeing,
yes,
they are basically theories.
Theory.
Yes.
So some of them are theory, but if you still take some past questions, you will still see where they put objective, not much, ABCD, like that. So your own is your job prepared for two, so that you don't get to exam and be disappointed. Is that okay?
Okay, sir. I have some past questions with me. The one for 2020, 2021.
Okay.
The one for 2019, 2020.
Okay.
Then the one for 2018, 2019.
Okay, they are all theory, are they?
They are all theory. Then
yes,
I'm going somewhere. I'm looking. There are some questions that they don't miss.
That they don't miss.
Yes.
Okay.
Like
and
these
that is
are
my
questions.
company's account.
This question one, they will say Prepare for presentation. Yeah, publish.
Company's account for publication. I know.
Yes, publication.
That means your knowledge of company's account is required.
Yes.
Because it's still knowledge of trading profit and loss account. So that's not a problem.
You are required to prepare for publication the statement of comprehensive income for the year end 31st December, together with the statement.
I've seen the question before. What they are simply saying, we have taught some people like that. So what we are simply saying is that your knowledge of trading account is concerned, and then how to put your trading account by starting with income, which is the sales, and you less cost of goods sold and get gross profit, and then subtract all add all incomes and subtract all expenditure. So that is the statement, income statement, and then prepare the appropriation account before going to balance worksheet, which will be in a T form, because they say you should make it for publication. It will be in a T form. So, but as far as you will explain, we'll do the two. Now, I did trading account that day.
Yes, we did trading account.
And the trading account, did I give you the vertical format?
No. We just work with the format that is in the book.
Okay, fine. With that question that we have treated, let's give you the vertical format version, which is the income statement, which is the trading. So you may have the right income statement or trading account. It all depends on what they want, trading accounts or income statement. But because there's no profit and loss account, so as usual for the year what ended, so you have to start with sales. Just like that same thing we prepared, start with sales. According to the question, the sales was 4,000. Keep it like this. Then you less these returns. Returns. That's the returns in was, Abby?
Yes, that should be 60 or so.
That's 60. And put bracket, Abby.
Okay.
Bracket means minus. We don't want to write less returns. You just write returns in words and put brackets. That will be 3,940. Is that okay?
Okay.
You know, this works on the other side. Now, the next thing is to less cost of goods sold. I hope you understand cost of goods sold.
Okay.
That cost of goods sold, you know, it will start with opening what?
Opening balance.
Opening stock.
Opening
stock is how much? And the question there, we have 3,000.
I want to open the question.
Purchases. Purchases give us Are you there?
Yes, sir. Trying to.
So now look at what I'm doing.
Okay.
Opening stock was in the last, as a middle. Then you add purchases. Your purchases will be at this third naira. Are you there?
Okay.
We'll write 1,000 there. Under it, we write returns and carry out subtraction by writing 50 naira. When we subtract, it will now give us 950. We'll now put it here. 950. Did you understand?
Sorry, can you come again?
You know, I've written
cost of
less cost of goods sold column, Abby.
Okay.
We now have opening stock under the second naira, 3,000.
Okay.
We now say add purchases. We'll put the value at the third naira or the first naira, Abby.
Okay.
That first naira will put 1,000. We'll move under it and write returns outwards and put 50 naira under the first naira, Abby.
Okay.
That 15 naira will put bracket. When we take away the 15 naira from that 1,000, we'll now put 950 in the second naira column under the 3,000.
Okay.
Have you done that?
Okay. I'm just listening. I'm not even writing. I'm just listening.
Okay, because I want to clean the board now, so you have to write something.
Okay.
So that even if you, by the time you hear my voice and still see what you have written,
yes.
because I'm recording like you said, Abby.
Yes, sir.
So when I get it, I send it to you so that you listen to it.
Okay.
But meanwhile, you need to write something.
Okay. Okay.
And just remember that one question alone cannot pass you in exam. I hope you understand.
Yes.
That you must do everything. Anyone you do, you can't just move on to next question. You can come back to that one as last. So that when they say stop, you can carry the paper, give them, and they continue.
Ah, okay. This exam, they fear me.
Don't let them fear you. Finance, now you should be confident, Abi.
Yes, I'm more relaxed with the finance than
you know, you'll be more relaxed now with the account. By the time we do, let's just do those ones that you will see. Then company's account will be last. We'll do that one last. All this bank reconciliation, immediately you see it, anyhow they bring it, you can get it. Or suspense account, or from what I've seen, the incomplete records. Those ones does not involve for publication or what have you. You just follow the rule. So that the one that involve publication, you just do the normal thing. But the idea is this trading account that will be involved. Is that okay?
Yes, sir. Let's see. Sorry. Opening stock.
Are you written that? I've written
Yes.
950 under 3,000.
Yes, I'm there now. 900,000. I'll just say okay. Return. There's the 1,000.
Return southwards. Return southwards will be under purchases. You put 15 naira there, put bracket under it. Taking away 15 naira from 1,000 in the first naira, we'll transfer the 950 to the second naira under 3,000. Is it clear?
Yes.
Okay. We're going to add more things to that column.
I've written it.
Okay. Fine. Now we have still on that stage. Our naira still continue like this, but you don't need to write another naira again. So in this case, you have add carriaging was Zavi.
Okay.
You know, the second naira is where the thing is. We have 3,000. You have 950. We are adding carriaging was of 18 naira. We are adding it to it. That means you draw a line like this: 3,000 plus 950 plus 80. That will give us.
Let's start my calculator again.
That will give us 4030. And you know this one is a stock of goods available for sale. Then the next thing is closing what? Stock, which we'll take away. And closing stock in that question is 500 naira. And this 500 will be a bracket to give us 3530. You know, on that same vertical line, there is sales of 3940, Abi.
Which one? Vertical line. Yeah. Sales of 3940.
3,940, Abi. You take it away, you then have 410, which
that's the profit.
Our gross profits. Is that okay?
Yeah.
On that note, that is how trading account in vertical form will look like. Then assuming now, I want to continue. The next thing is profit and loss account, Abby.
Okay.
So this gross profit, I'm going to add all the incomes to it and less all the expenses to give me net profit. Did you get it?
You said that you're going to do what, please? Sorry, sir. Sorry,
What?
just give me like 1 minute. I don't know why this my colleague is calling me for long.
Okay.
All right, sir. We can continue.
Okay. So I said, but we have not, you know what we did that it was profit and loss, Abby?
Okay.
So what I'm saying is assuming there is a profit and loss account with this gross profit, because it's going to be a continuous something. I wouldn't have closed that. I wouldn't have drawn that line if there was profit and loss account attached to it. Because when they say prepare an income statement, that income statement is made up of trading account and profit and loss account. Is it clear?
Okay, sir.
So this is my gross profit. Now what I'm going to do, I will add incomes, all incomes like discount received, investment income, and so on. When I add it to the gross profit, I'll get a value. I will now less all expenses from this. When I less all expenses, I will now get net profit. Is it clear?
Okay. All expenses, like expenses that they run with the business, right?
Like discount, salaries, wages, and so on. But first of all, this is how trading accounts should look like. Is that okay?
Okay, sir.
In a vertical format. So let's move on to profit and loss, which is
like
chapter.
that T format is not really trending again.
No, it's still trending. No, it's trending. No, it's only for publication. You heard them say so for publication.
Yes.
If it's not for publication, use your T form. T form is not outdated. It's only for publication. We still use T form. And there are some transactions you can't use vertical. When you are preparing cash group, you will use vertical.
Okay. No. That's for cash group now.
When you are preparing bank reconciliation statement, you can't use vertical. It's only bank reconciliation that you verticalize. And when you are doing partnership, because partnership is not for publication. Abi?
Yes.
Receipt and payment income and expenditure is not for publication. Single entry bookkeeping is not for publication. You must use your T form. Manufacturing account is also not for publication. You use your T form. And in most cases, manufacturing account is even one-sided, Abi?
Okay, yes.
So there are things you cannot, it's only final accounts of companies or one-man business if they insist. That's why that question you read to me has to say for publication. Sure. If it's not publication, say prepare. You can do it. The only method is like vertical T, but T still remains the one that represents double entry word principle. Is that okay?
Yes, sir.
Okay, let's go. So that we can summarize it. Let's go to profit and loss account, chapter 10. Are you there?
Chapter 10. Okay, can you just give me, let me connect my second screen. So I'll be having that, I don't have it physical with me.
Okay.
Let me connect my other screen. Life of a man. Go hustle this side, hustle this side. This way, no. Okay, just a minute. A minute. Okay, so yeah, yes. Okay, yes. Chapter 10, profit and loss accounts. Yes.
Yes, profit and loss. We have seen how trading account looks like. Let's look at profit and loss. If you look at the profit and loss account, if you look at what is in the book here, there is a T form, both debit and what? Credit.
Debit.
Okay. The debit side is for expenses, Sabi?
Yes.
Credit is for what? Income.
For income and gain. Yes.
Good. So what I'm saying now is that this trading account I have just done, this my line that I have drawn will not be useful. I'll just leave it as 410.
10.
Based on the trading account I have done, this vertical T form. Insurance, first of all, the gross profit part has a discount received and rent receivable, Abi?
Well, sorry, I have a question. Just if they ask us to do a profit and loss account, are we starting with the trading account first, then now continue?
Yes, if they say prepare income statement or prepare profit and loss account, because income statement is made up of trading account and profit and loss.
Okay.
Then statement of financial position or balance sheet is a loan.
Is a loan?
Yes. It is the trading account and profit and loss account, which is an income statement that will join together. Yeah. Is it clear?
Okay.
Now, to join this one to this, you have seen what I did here still for my bit?
Yes.
Now, I'm going to, from here now, I'm going to join into this one, ignoring the gross profit that is here. Now, that gross profit I got 410. You first of all include discount receipt of 30 naira under it, put it 30, rent receivable 30, you come 60 plus 410. Are you following?
Okay. Discount.
What
discount receipt.
What I would just write? Discounts. Discounts. Discount what? Receipt. I will now put 10 naira. No, 30 naira, Jerry.
30 naira.
I'll put 30 naira. Then I'll write again, rent receivable, I'll put 30 naira. Is that okay?
Okay. What about that discount allowed?
This discount, no. We are putting discount receipt, which is an income, so that we'll add it to gross profit, which is 10 naira, 30 naira. Then rent receivable, we're adding it to it, making 410 plus 60 naira. That will be 470, Abi.
Okay, yes.
So from this now, we now continue with the table. Still a continuation. Me, I'm writing naira. I don't need to repeat again. So we are continuing that. So we'll now say less expenses. Will be less than expenses. The first expense is what? Insurance, Abi?
Okay. Yes, insurance of 60 naira.
Insurance is 60 naira.
Okay.
The next one is general expenses. Which is 80 naira. The next one, I'll write motor what? Expenses. Motor expenses. I'll write 20. The next one is discount allowed. Are you writing?
Okay. Yes,
discount allowed. 10 naira. Discount allowed 10 naira. Rent payable, no. Commission payable 15 naira. Commission payable 15 naira. Have you written that?
Sorry, just give me a few minutes. Next.
Okay. You just copy all those expenses with the exception of net profit. Motor vehicle, discount allowed, commission payable 15 naira.
Okay, motor expense, commission payable, right?
Commission payable 15 naira. You put under it.
Commission.
Rent pay.
Commission pay.
Commission payable 15 naira.
Okay.
Rent payable 16 naira. Rent payable 16 naira. Are you there?
Rent payable. Yes.
Wages 32 naira. Wages 32 naira. Are you there?
Yes, sir.
Carriage outwards 82 naira. Carriage outwards 82 naira. Have you written that?
Carriage outwards, right?
82 naira, yes. You know, there is a carriage inwards in the trading account. There's a carriage outwards in the profit and loss account, which is part of the income statement.
Okay.
Is it clear?
Yes, sir.
Now, I want you to help me press the calculator. 60 plus 80 plus 20 plus 10 plus 50 plus 60 plus 92 plus 82. What's the total?
10 plus 80 plus 20 plus 50 plus 60 plus 32 plus 82 equals to 384.
Okay. Now take away. Okay, yes, 384. I mean.
Yeah. So push it to the last end. I mean.
Yes, 384. Draw a line here to close it. Let's assume that's the last one, but I know your book that's not the last. The last
so
is
we'll put brackets now.
Which one?
You have to have
we'll brackets. We'll put brackets because we're. But if because I have written this, I have to clear that. If I have not written the less, I won't put brackets. But if I have written less already, there's no need putting brackets. You can't use the two at the same time. But I've cleaned one now. So expenses total is this. You now take away this from 470 naira.
Yes.
That will give us net profits.
Okay, so minus 470.
470 minus 384. What do you have?
86.
86
naira.
Only.
Yes, sir.
So that's how to run it. When they say prepare an income statement for publication, you do like this. Your income statement for the year ended will be made up of the trading, the profit and loss. Is that okay?
Yes, sir.
Then the other one is your balance sheet. So they can call it, but they may not want to call it balance. If they call it balance sheet, fine. If they call it statement of financial position, which is still the same thing as a balance sheet. Is that clear?
Yes, sir.
So like I balance told you that.
Okay. You said something now. Sorry, I didn't get that very well.
A moment. It could be statements. Statements of financial position. Position for the as at. Are you following?
Yes, sir.
Which is the same thing as balance what? Sheets.
Balance sheet. Okay. Statement.
Because like I told you, balance sheet hasn't expired. WAEC examination, like I told you that day, still talk about balance sheets, still talk about trading account. So you can't say it's outdated. And WAEC is a big body, big examination body. Even NECO exam, JAM exam, when they want to set down accounting, they still call it balance sheets. I hope you are following.
Yes, sir.
This publication thing is actually for accounting students, real accounting students. But because you are doing an MBA, they want you to have an idea of what this thing looks like.
Right.
So that when you see a statement, you'll be able to know what they're saying or what it means. Or whichever one. Is it clear?
Yes, sir. Because I've noticed this, they are for the past 5 or 6 years. Their question 1 is always they will give you a trial balance. Then they will give you
and
one
that's your past question that you have. Do you have 2021, 2020? Do you?
2020, 2021, yes.
You have it.
Yes, sir.
And it's still to that same format, have it?
Yes.
What of 2021, 2022? Do you have anything like that?
No.
So what you need to understand is that, and some of these past questions they give to you people, some of them are not that real. Some are. But one thing is clear, the only thing that you should be talking about more is the scheme or the course outline. Are you following?
Yes, sir.
Your own is to everything about the course outline, you do it and understand it. Like if the course outline is 10, and you should be able to master those ones that you know is important, and you do it because so that person will go pursue practical. At the end of the day, there's only one question, only one. Why the other ones are there? But notwithstanding, statement of financial position or what we call balance sheet. Are you there?
Yes, sir.
What we have here is a capital plus what? Liability is equal to what?
Asset.
Yes, that's what we call accounting equation. Accounting equation. So I can able to say accounting identity. When we say accounting equation, it means the left-hand side of that equation was equal to the right-hand side of that equation. Is it clear?
Yes, sir.
Good. Now, without wasting much of our time, if we are talking about T form, left-hand side will be capital and liability, right-hand side will be assets. But if we are doing it in a statement of financial position, we start with asset. And that asset, we say it is, instead of writing fixed asset, because they have said it's for publication. If they have said it's for publication, instead of writing fixed assets, we say it is non-current assets. Abi?
Okay.
Then current assets will still remain current assets on that side. The next level will be financed by, which is capital. And you add the net profit and less drawings. And the long-term liability will now be known as non-current liabilities. Non-current liabilities. And then we have current liability. The two sides will agree. Is it clear?
Yes, sir.
Looking at my own example here so that I can turn it to that statement of financial position. Looking at my own here, Sandy and Son balance sheet. The left-hand side is capital. That capital is capital invested, 35,000. Are you seeing it?
Which page are you? Which page?
I'm on page chapter 11, balance sheet. You never read that side? Chapter 11, balance sheet.
I'm coming. Let me, it's on the other book.
Okay. Yes, 11 to 20. Yes. Okay.
Okay, balance sheet, yes.
Yes, so if you look at that balance sheet, the T form that I put here, because we can't be doing a textbook for one section alone. For those doing work, they need it. And those doing a higher something, they will now understand what I'm saying. Balance sheet, the left-hand side is for capital and liabilities, while the right-hand side is for assets. Now, like I said, the left-hand side is capital, 35,000. You add net profit, that's how you arrange it. You now less drawings. If there's no drawings in the question, you ignore. If there is, work on it. The next thing is long-term liability or non-current liabilities. Non-current liabilities. That is the loan or the venture, as the case may be. Now, the next thing is current what liabilities. We have examples of current liabilities that we know: creditors, bank overdraft, and expense owing, and so on. Then the right-hand side is fixed assets. The assets are divided into two: fixed assets and current assets. But in that publication, we'll call it non-current assets. But they are all assets. We'll call it non-current assets. And the other one will be current what? Assets. The two sides will agree. This is what I'm saying. If we are to follow that statement of financial position as at 31st September, 30th September 1993. Draw a line here. We have Naira. Also have Naira. We decide to add the third one, which sometimes may be relevant or not. We now write assets. The next one is non-current assets. So you now write premises, which is the fixed assets, like I told you. Premises. Write 20,000 here. Okay, 20. Okay, that's right. 20,000 here. Then we'll less depreciation. Oh, sorry, there's no even depreciation. So we'll have a machinery. We'll come to that type where there's depreciation. Machinery is 14,000. We add up and it becomes 34,000. Is it clear?
Okay.
After
so
the
when we are doing the vertical, we'll pick assets first. That is non-current
assets. Assets come first. Then other ones will follow. It will just go down. The next thing, current assets. Before we normally do this one, like the trading account, which has less cost of goods sold. In those days, we normally put non-current assets. They will now say add working capital. And in case you have forgotten, working capital formula, you can write it down. Working capital is equal to current assets minus current liability. Are you following?
Okay.
But for now, the thing looks so easy. We just write current assets, stock, which is 1.5. We just put it here, 1.5. 1.5. We now have debtors. We now put 500. Then we have cash. We put 2,000. Then we add everything together. We add everything together to give us 4,000.
4,000.
Then we add and add to give us 38,000. Is it clear?
Yes, sir.
The way I did this T form is still what I'm doing. All I did was to take what is on the right-hand side, put it first, Abby.
First. Yeah, then now put the other one under.
Put the other one second, that's all. There's nothing there. It's just that I will just be using the nomenclature to represent the new term they want us, because the question has mentioned for publication. And that's how all of that terms are coming in. But if it's not for publication, I can use my T form and do what I want to do.
And move on.
Because we need to publish it for the outside world to see. And they must, the thing will show the chartered accountant that record it. Are you following?
Yes.
If you did not follow the rules, his license could be seized or it could be queried. That is why when the person is doing it, they will follow the rules. But that does not mean that's how he's going to be doing when he's within the company. Can do some double entry to get certain information for him to prepare the statement of the financial position. Is it clear?
Yes, sir.
It's just like because somebody say, my own method we should follow. And who is this somebody? International financial reporting standard or system, as the case may be, which is international, saying that all accounting bodies must do like that. Abi?
Yeah. Yes.
They don't be like say they on the work.
Abi, based on saying them be Ghana.
And again, Nigeria has their own. Their own is FRCN. You know FRCN?
FRCN.
I
don't know that. Now, Radio Nigeria be that.
I know that radio you go talk. Federal Radio Corporation of Nigeria is on its own. But FRC, if you have to put N there, that's what I'm trying to put Nigeria. That one also means Federal Reporting System of Nigeria. No, Federal Reporting Council of Nigeria, FRCN. So that is their own term. Federal Reporting Council of Nigeria. So that is the equivalent of IFRS. Are you following?
Okay.
In Nigeria. So Nigeria, because we are signature, anything they do, they have to communicate. And the accountants, because this thing is just for accountants, chartered accountants. So take note. That is how we want records to be presented to the public, which is for publication.
Sure.
So that's how we're having all this.
So that it will be uniform.
So that this accountant in Uganda will not publish differently from the one in London. So that they will follow the same format. But that does not mean if you are not a chartered accountant, they tell you to prepare an account, you can go through this method that you know, which is cheaper. You can see that what I did there's nothing different. I just pack what is on right, put that first. Second one, instead of me writing capital, I will just write finance by. Have you?
Finance.
Well, have you written this?
I've written everything here.
Have you closed it? 38,000 and draw 2 lines under it.
I did not close it too because we are still writing some things under.
Oh no, there's nothing to write. This one you close. 34,000 plus 4,000. You write 38. And then draw 2 lines under it. Close it. Huh?
The other side now. The other side
No. The other, like I told, this method is so interesting. It's just that they just want us to do something. Immediately you do the first side, you close it at 8,000. I draw lines, close it. Are you there?
Okay, sir.
So we'll now continue on that. But what we are going to get will not be added to the first one. They are all independent.
Okay, so I'll close it with double line, Abi.
Double after writing that 8,000, you draw on that 2 lines that are too close. Okay. Are very close. So that's the principle of closing an account.
Okay.
Yes.
We've
Have you done that?
Yes, sir.
Okay. Now, After that, your line, because this is what I'm saying, you must have done something like this.
Yes.
After doing it, the next thing is to say, which is the other side of the balance sheet. We now use the word financed by. Are you following? Okay. Everything you saw in the question, we'll repeat it. Balance, we can say this is that last naira, this is another naira, this is another naira. It's a continuation of what you have over there. This 38,000 is occupying the other third naira. Are you following?
Okay.
So now we have balance brought forward, balance video brought for anyone. So we now write 35,000. 35,000. We add net profit, Abi, which is
466.
466. We add, and this 35, 466. So we less drawings, which is given in the question, and it's 1466. And I put bracket, I draw a line, and I get a total of 34,000. Is it okay?
Okay.
So after this level, the next thing I will write is non-current liabilities. Are you with me? After copying this. Okay, just copy it. Let me clean it.
And let me quickly rush this one.
Copy it. Let's move.
Okay, less drawings, Abi.
Yeah.
There's drawings and withdrawal. Are they the same?
No. Drawings is the amount of money somebody takes out of the business for his own personal use. Are you following?
Okay.
Or withdrawal is when you go to bank and withdraw your money.
Okay. Okay.
Or withdraw the company's money.
Okay. Like in double cash, like in double column cash book.
So, but this one is drawings. That drawings simply means indiscipline.
Okay.
Somebody just is reckless with money. Just withdraw it and go and buy what you like. Without the interest of the business. Yes. Is it clear?
Yes, sir.
Good. Can I clean?
Yes, sir, you can clean.
Good. So now we are continuing with it on down. The next thing is non-current liabilities. Loan from case more. You know, our naira still remains. We have a naira 1, 2, 3, 4, 1, 2, 3. The third one is where we are putting this one. The last one. The last one, the loan is how much is it?
Loan from case 3,000.
Okay, it's just 3,000. Okay.
Yes. So it goes to the extreme, right?
3,000. Yes, it goes to the extreme. So join that 34,000, Abi.
Yes.
And after that, the next thing is current liabilities. We have creditors. We have bank overdraft. Bank overdraft means withdrawing more than you have at the bank, Abi.
Yes, sir.
So we have the second naira, maybe 600. The other one is 400. We add up, that is 1,000. I will add everything together. It will be 38,000. Are you following?
Sorry. Okay.
So that means this 38,000 and the other 38,000 is the same, agree?
Yes.
That means we have balanced the account. Is it clear?
Yes. Yes.
Good.
Yes. Yes. Okay. So this vertical own is just to arrange it.
Just make it go straight. Just straight. But if it's not for publication, you don't need to bother yourself with that. Is it clear?
Yes, sir.
Remember, this is an account of one-man business, and there are methods of calculating depreciation, Abby. Do you remember?
Method. I know there's a straight line method.
There's a straight line method. There's a reducing balance method. There is some of the year's digits which you are expected to understand, but we'll just show you that one by teaching you how to calculate those kind of depreciation in this.
A lot. Hey, God. I want to learn all these things. Can't read for other courses. Can't pass this exam.
It's possible. They expect you to be multitask.
Hey,
after it's only 2 courses there that involve calculation. Not much. Unless accounting is addition.
Economics involves some small formulas.
Small formula. It's not much. Apart from finance that has more formula, accounting, the formula is not much that you cannot remember. This one is just remembering what should be on a particular side and what should not be, and how to arrange this statement of income statement, then statement of financial position in a vertical format for publication. Apart from that, the T form is already there and is also good, but it depends on what they want. But let's just teach you how to calculate depreciation using various methods. Now we have shown you how to do trading profit and loss account to balance sheet or income statement and financial position. Abi?
Yes, this one we did now is a statement for financial position.
No, this one, yes, this one is statement of financial position. The other one is the income statement. Is that okay?
Yeah, income statement. That's the one that has a trading account.
Trading and profit and loss. Yes, that's the income statement. And this one is the financial position, which we otherwise call balance sheet. Is that okay?
Okay, so what they say you should prepare account for publication, they're expecting you to produce these 3 accounts.
Yes, you produce these 3. The first one together, and this one alone. For publication. Well, they didn't say anything. They didn't mention publication. You just do what you feel like. The T form and so. When they say for publication, then you have to do it like this. But you know what we did now? There's no depreciation in it, have you?
Yes, and there's no
other adjustment like
there's no adjustment. Yes.
So and one of the adjustments is depreciation. Are you following? Okay. The other adjustment, when I think depreciation, I will tell you the other adjustment as we solve a question. As we are solving the question, the other adjustment will explain to you. But let's quickly explain this depreciation, how the methods, because apart from the sole proprietorship account, apart from the company's account you will be asked to prepare, they could ordinarily in the question tell you to calculate depreciation. Are you following alone? Using either straight line method or using reducing balance method or using the sum of the year's digits method. Is it clear?
Yes, sir.
So let's quickly see that one. That one is on page 61, chapter, that should be 13, I believe. Yes, chapter 13, page 61. of my textbook, Guides to Principles of Account. You'll see it there. Have you seen it?
Page 61.
61. You will see depreciation.
Is it?
Have you seen it?
No, I'm in page 61 now.
Good. Did you see depreciation?
Okay, depreciation, yes. Yes.
You already know that depreciation is a wear and tear of an asset, have you?
Yes.
There's a decrease in the value of an asset as a result of usage. And there are various methods of calculating depreciation. The one we are expected to learn or to understand is a straight line or fixed installment method, reducing or diminishing balance method. And the third one is sum of the year's digit. Is it clear?
Yes, sir.
We'll take the question here not to waste time. A straight line method has definite method of calculation. It is depreciation formula equal to cost of asset, I mean?
Yes, less scrap value.
Less scrap value or estimated value, whichever value they call it. All over a number of words, yes. We are believing that the question comes as cost of machine, 1,000, scrap value, 64 naira. Lifespan of this machine is 3 years. Is that okay?
Yes, sir.
And the question says calculate depreciation and then show the schedule or show the depreciation schedule, how this thing will go from year 1 to year 3. Formula is in the book there. D equal to C minus X all over N. D is for depreciation. Cost of assets is 1,000 minus 64 naira all over 3. And you have 936 over 3, that's 312. That means depreciation under straight line method will be 312. Every year we'll be subtracting that same amount for the lifespan or useful life of the assets for 3 years. Is it clear?
Yes, sir.
Then we now try to show the schedule, how this thing will go on for 3 years. I know how this asset is coming down, 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 down until the 3rd year. Year 1, cost of machine is 1,000. In that year 1, you less depreciation of 312. It will give us 688, which represent the cost of the asset after 1 year. Second year, we remove the depreciation also, 312. It gives us cost of machine after 2 years. Third year, we remove that same depreciation of 312. And it gives us that same scrap value you saw in the question. And that is how depreciation is calculated under the straight line method or fixed instrumental method. Is that difficult?
No.
Simple. The second method is called reducing balance method.
So, but if they ask us to calculate the depreciation without showing the schedule, we don't need to do this schedule now.
If you don't need to do schedule, just get 312 alone.
Abuba.
And stop. But in most cases, they may or may not. For now that we are doing it inside the trading profit and loss account or the financial statement or income statement or financial position, whichever. But as far as examination question can be on that alone or objective, remember what I told you. Objective. So because remember that every year the lecturers to a particular course determine what the question will look like, Abby?
Yes.
And some of the past questions you are holding was determined by so many of them that are no more there in this university. I hope you understand. So every section or semester, those who lecture that particular course decide on what will be said. So like even those of us that teach in some private university as part-time or some public as part-time, we also determine, contribute how the exam will look like. So it doesn't mean that what they have been doing before, we just go and pack it and put it there. and that becomes a question for that year. No.
Yeah,
You can't just decide. So every question changes as the semester, and those who are there, because some are retiring, some are coming up, and so on and so forth. So that's how it is. So, but your own is, your focus should be on the course outline as at the time in question. Is that okay?
Yes, sir.
That's my advice. Now, reducing balance
even
method.
Now to we are registering for the second semester course this week.
This week, yes, you are starting for second semester. And that one will be what I need to do this one first. By His grace, we are also here. It's just that it's good to start early, so that you master the thing. Because this thing you are doing is not only to pass the exam. As far as you want to use it for employment, you need to master the thing and be able to prove where the need arises in the organization you are working.
Yeah.
So you start early, no while things will be done properly. Okay. Reducing balance method. This method, like I said, it involves every year the amount to be reducing in value. And this one uses percentage to calculate depreciation for every season. For instance, a machine value 1,000 naira is to be depreciated for 3 years at the rate of what? 60%. This one does not have a formula that we're going to write down and see calculation. This I will most show the schedule, how this thing will go from year 1 to year 3. Cost of machine 1,000, less depreciation, 60% of 1,000. Are you there?
Yes.
600 naira. The next year will be 400. Our 60% calculation will be on the second year value. Cost of machine after first year will be 400. So it will now be second year, 60% of 400. That will be 240. Cost of machine is also less. That will be 160. You now calculate depreciation, 60% of 160. That will be 96. We still get the scrap value that was similar to the former one. That's all about reducing balance method calculation. Is it clear?
Yes, sir.
Finally, sum of the year's digits. This one says, given an asset value 1,000 naira, which should be in use for 4 years. So the calculations. The calculations appear as follows. Remember, the assets will last for 4 years. From year 1, from the year 1, they purchase the assets, or from the period the assets was bought, or from the purchase period. It will last 4 years, have you?
Okay. Yes.
The other one, 3 years. Another one, 2 years. Another one, 1 year. Is it clear?
Okay. Yes.
From when it was bought, the number of years it will last, the next one. So those are the digits. 4, 3, 2, 1. Total is 10. Some of these digits, or what we call some of the years digit, is 10 years. Abi?
Okay.
Our depreciation will be calculated in ratio. The first one ratio is 4, Abi?
Yes.
4 over 10 times 1,000. We get depreciation for year 1. 3 over 10 of 1,000 we get depreciation for year 2. 2 over 10 times 1,000 we get depreciation for year 3. Year 4, like that. Is it clear?
Yes, sir.
And if we try to subtract everything, because there is no residual value here, to keep on subtracting 2,000, the scrap value will be 0, Abi?
Yes, the scrap value will be 0. So that means if they say us to prepare the schedule for this one, we'll just do first year minus 400, minus 300,
yes,
minus 200, minus 100. Then you now get
and everything will be 0.
Scrap value.
Good. Is it clear?
Yes, sir.
Now that we have known how to do depreciation and we know the meaning of depreciation, that depreciation is a loss and it must be debited to profit and loss account, or is an expense in the income statement or whichever method you adopt. Let's see this question. So now you have known how to change the method, Abi?
How to
adjust it now to straight line, vertical,
yes.
Abi?
Yes.
And
Yes.
like this one you saw on the board, you can take our T form to vertical, Abi?
Yes.
So that's not my problem. Let's look at page 68, example B. Let's see trading profit and loss account up to balance sheet with additional information, with adjustment, and so on. Is that okay?
Okay. Yes. Sir.
Look at the question. The following trial balance, are you there? 68. Page 68.
Page 68.
Of guides to principles of accounts. Page 68.
Okay, the following trial balance. Example B.
Yes. The following trial balance was extracted. Do you know how to extract trial balance?
How to extract trial balance?
When they give you list of transactions and tell you to extract trial balance before doing trading profit and loss account up to balance sheet. Can you do it?
No.
Okay. We'll give you a question later, which you are going to try.
Okay.
When you try, because I want to actually use your hand and try something. So I will send you the question and I will give you how a trial balance works. I'll draw it on the board, you write it down, how a trial balance works. But meanwhile, a trial balance has been given, Abi?
Yes, sir.
So you have capital down to discounts. The two discounts, one is allowed, one is received. The returns, one is inwards, the other one is outwards. Additional information, A, B, C, D, E, F. And there is Roman figure 1 and 2, which says prepared trading profit and loss account, which is the same thing as income word statement. Abi?
Yes.
We'll start with opening stock. We can see opening stock in the trial balance, Abi.
Opening stock.
There is a stock.
Yes. Stock. January 1.
1990. Have you seen it?
1990. Yes.
1,600. Have you?
600. Yes.
We'll put it there. Add purchases. For instance, the question 73,130. With less depreciation. Sorry, with less returns outwards of 435. Have you seen it?
43 returns. Yeah.
Outward.
Okay. Returns outward. It's on the credit side.
Yes, that one on the credit side of the trial balance is outward. And that's why knowledge of trial balance is important. If you don't know trial balance, you won't know where to see these figures to prepare the income statement and the statement of financial position.
While studying, there's something I noticed.
Yes.
I noticed that discount allowed is always on the debit side. Yes. And discount received is on the credit side.
Yes.
You know, it goes against the principle that states that the receiver should be debited and the giver should be credited. So I felt maybe it's where the reason for the discount is. That's where the discount will be in the record. I don't know if I'm right. I just assumed it like that so that I can understand. Like if I make sale, you understand? If I make sale and I allow discount,
yes,
you understand? That discount is supposed to be like an expense to me, Abi.
It is an expense. It is an expense. And all expenses are debited to they have a debit entry, and that must be debited to trial balance. Why discount receive is an income to the person receiving it. So an all income are credited to trial balance. Remember, discount allowed relates to the seller, Abi?
Yeah, discount allowed relates to the seller.
Because it is when the seller sells, he allows a discount to encourage his customers, Abi?
Yes.
So that they can pay on time. And to the buyer, it is when you buy, the buyer or the customer, the discount that was given to him by the seller. Is discount received, Abi?
Yes, that means it's an income, right?
an income. So incomes are credited to the trial balance, while expenses are debited to the trial balance. Exactly.
Okay. Yes.
But we'll still throw more light later.
Okay.
We have purchases. Returns outwards is quite different, because returns outwards and returns inwards does not follow that principle of incomes and expenses. It's knowledge of double entry principle. That's why I say you can't take this thing off. The double entry principle allows it to be at the debit side. Inwards debited, outwards credited to the trial balance. Because even if you are saying vertical format, you can't take a vertical format for trial balance, have you?
For trial balance.
You can't now.
Okay.
Must always be debit and credit, have you?
Yes.
So for the double entry is also applicable in the trial balance, but we'll come back to that. So we have less returns outwards from purchases to give us net purchases, have you?
Yes.
Of 72,695. Then you have carriaging walls. You know, carriaging walls is what you
use to carry the goods to your shop or your warehouse.
Transportation. Yes, cost of transportation paid on goods ports. So that cost of that goods is carriaging one. It's part of purchases. When somebody is doing business, he will add it to it for you to determine the actual state. And that's why I added the 290. So 21,600, which is the opening stock, plus net purchases, which is what is it called? Which is opening stock, plus 72,694, which is the net purchases. Added together to carriage was gives us a stock of goods available for sale or cost of goods available for sale. Then we'll less closing stock, Abi?
Yes.
The closing stock is that stock outside the trial balance, Abi?
Yes, it's not always in the trial balance.
Yes, closing stock does not appear in the trial balance. It's always outside the trial, which is additional information, which we'll call footnotes or adjustments.
Okay, so footnotes.
Yes, additional information. We'll call it additional information. We'll call it adjustment. We'll call it footnote. Those are the things we call them. And that is what we are applying. Now, you less closing stock, you get cost of goods sold, Abi?
Yes, cost of goods sold.
Our sales from the trial balance is 105,460. Then you less returns inwards directly from purchases, from sales to get net sales. Just like we did for purchases, by lessing returns outwards from purchases to get net purchases. At the end of the day, we're having net what? A gross
net
what?
Sales.
Take away the cost of goods sold from the net sales, that gives us gross profit. And that marks the end of the trading account or part of the income statement. Is it clear?
Okay. They will not continue on that to add other expenses. Why you did double line here? Is it allowed? But when we're doing our example on the screen, you removed it.
Which double line?
Like in your book here, after this 104.
Yes.
You did
you draw 2 lines, Abi, under the value. And that 2 lines under the value is that you have closed the account, the first income statement. But like I told you that time, if we use the vertical format, the gross profit will be left without drawing a line, because you are going to add income to it, Abi.
Okay, so this one is because we are using T. That's why you cross it like this.
Yes, go are using T form. If you want to turn this one out to income statement, you do it that same way we did it, Abi.
Okay, yes.
So you can try it out.
Yeah, so but if they ask us now to do for publication, that means this profit and loss now will be vertical, right?
Yes, vertical. Sales will start first, Abi.
Sales will start exactly. Question.
Then you less cost of goods sold.
Good. Okay. Then you put
And
the
that cost of goods sold is repeating what I have done here on the left-hand side, opening stock and policies to get cost of goods sold for you to take it away from sales to get gross profit. Immediately you get the gross profit, you won't draw line again. You just add all the income. Look at the income statement on the credit side. Look at the question. So all I'm going to do now is to look at the question one after the other. All I'm searching for now is all income and expenditure. And I look at the question one by one. Capital. Policies and sales, returns, debtors and creditors, stock, carriage in words, motor vehicle at cost, freehold property at cost, office equipment at cost. The next thing I saw was salaries, Abi.
Okay. I want
all
to
I've been calling for
salaries.
is either we have used them in the income statement, or we're going to use them in the financial position or balance sheet as the case may be. So as I take salary, I would debit salary to the profit and loss account, or I will subtract as expensive when we're using vertical format. But let's understand this tip.
Sorry to drag you back, sir. Now we are going to fix in expenses, right?
Yes.
After getting this net profit, this is a gross profit. So motor vehicle is also an expense, right?
No. Motor vehicle is an asset, non-current asset.
Okay.
Remember,
office
the income statement, either the income statement or the profit and loss account. Profit and loss account is dealing with all incomes and expenses.
Okay.
Are you following? Why the trading part of the income statement is dealing with cost of goods at cost price and sales alone, that is always at selling price. Is it clear?
Okay, so this so I just want to understand very well.
Go ahead.
This profit and loss now, we are dealing with everything that has to do with sales and purchases of goods, sales of goods, the expenses that are related with the trading, Abi?
No. Profit and loss account alone, after the gross profit matter, deals with all incomes and expenses or expenditure. Is that okay? Why the trading account? Why the trading account of the income statement deals with stock or goods or inventory at cost price and at selling price. The only selling price is the sales. The others are cost price, opening stock, add policies, less closing stock. So that is a stock. So there's even between stock and the income and expenditure.
So this one we're preparing now is a trade profit and loss account.
Yes, together. But we are finished trading account, have we?
Yes.
We're not going into profit and loss. That deals with only incomes and expenditure.
Okay.
So if we finish the T format, if I do the T format, you can turn it to the vertical format I taught you.
Okay.
Which is easier then.
Okay, so this motor vehicle is
an asset.
It's not an expense.
No, it's an asset that will go to balance sheet or the financial position of the company.
Okay. Okay, sir. Please go ahead.
Okay. Now, the first thing I saw there was salary. Salary was 9,750, Abi?
Yes.
I will now look at additional information. Where there's a place they mention salary. And I saw C. What's in that C?
Accrued salaries.
Very good. The word accrued. The word accrued. A-double-C, I've missed it. A-double-C-R-U-E-D. These are accrued. Another name for accrued is accrual. Another name is due. Another name is unpaid. Unpaid. Another name is outstanding. Another name is owing. Another name is arrears. I hope you are following.
Yes, sir.
Anytime you see this kind of name, that is it. And what does it mean? It means that you are owing for services that have been rendered to you. Are you following?
Yes.
If you have not paid your tuition fee, it shows you are owing. And as you are owing, that owing can be divided into two. How many?
You said into two.
Yes. There is expenses owing. Are you with me?
Okay.
There is income owing.
Income owing. Okay.
Remember, like I said, if you are paying school fees to University of Lagos, are you following?
Yes, sir.
That school fees that you are paying is an expense. You agree?
Yes, sir.
That expense, that tuition fee you pay to Unilag. So Unilag is an income, Abi?
Yes. To me, it's
So
an expense.
you can see there are two versions. There's income owing, there's expenses owing. As far as owing is concerned, whether they call it owing or outstanding or paid or due, and all the language arrears, owing for the year ended, owing for the current period is always added. Is always plus, you add. Is it clear?
Okay, you said owing for the current period.
Yes, owing for the current period, owing for the year ended, owing for that same year you are preparing the income statement will be added to the original expenses to make up total value.
Expense. Okay, okay, good.
Is that okay?
Yes, sir.
We'll come to a point, maybe under another topic, which we call single entry bookkeeping or account for non-profit making organization, where we will have owing for current year and previous year. Are you following?
Okay, sir.
In that situation, we'll tell you what to do. But for now, this is income for the current year. All owing for the current year must be added because it's not like saying your rent is 500,000 naira and you pay the landlord 300,000 naira. Maybe you are owing 200.
Yes.
When the landlord wants to write rent, it's going to be 300 plus 200, Abi?
Yes.
Because that one was owing, and that is owing for that accounting period. So owing for the year ended is always added. And there are two types of owing. This owing, this one is current liability. This one is current asset. So not all owings are liability. Take note of that. There are different types of owing. Expenses owing is an example of current liability in the financial position, what have you, financial position or balance sheet as the case may be. But income owing is under the current assets of the balance sheet or a statement of financial position of the organization. Is it clear?
Yes, sir.
That's why you see in the question, salaries. I open brackets. I wrote 97250 plus accrued salaries of 564 to give me total salary as the total expenses for that accounting year as 10,314. Is it clear?
Yes, sir.
Good. The next thing, just like I was taking the question one by one, is so that I will avoid what we call error of omission. The next one is electricity. Electricity is 380, Abi?
Electricity.
380, Abi?
Yes, yes.
And that's an expense. And according to this question, there is no place that they have mentioned electricity, Abi, in the additional information.
In the additional information. Okay, so that means as we are entering, we'll be looking at the additional information to check if there's any changes.
You must to complete the matter. Because that's what they call adjustment. Adjustment, you can add and subtract, Abi?
Yes. Okay, prepare. Okay, no.
So electricity, I debit it because an expense. The next thing I also check. After electricity, I saw provision for depreciation. Have you?
Yes.
This depreciation, you will not enter it in the income statement because this is depreciation in the trial balance, which represents depreciation in the past. And income statement or profit and loss account does not take things in the past. The meaning of that heading in the income statement or profit and loss account, we say for the year ended, simply means transactions meant for past are not recorded. Transactions for future are not recorded. But you only record the current transaction. Only the current transactions are recorded in the income statement. Is it clear?
Yes, sir.
So that's why this provision for depreciation, made up of 1, 2, motor vehicle and office equipment, will not be recorded in the profit and loss account or the income statement. The next thing is provision for bad debt, Abby.
Provision for bad debt. Yes.
Another name for that is provision for doubtful debt. To doubt. Provision for doubtful debt. That's another name for provision for bad debts. Another name for is either doubtful debt or bad debt. Or sometimes they may write provision for bad and doubtful debt, whichever one. But what that one simply means that it is the kind of debt you are not sure of receiving. Is that okay?
Yes.
When you are not sure of receiving an amount, because the word doubt means we are not sure. So when you are not sure of receiving an amount of money, that amount you are not sure of receiving in accounting is a loss. Is a loss because there is a provision for doubt. Is a loss. And somebody may not pay. And that money we are not sure of collecting. That amount is a loss. If the person owes again, that doubt will increase, Abby.
Yes.
That becomes increase in provision for bad debt. And that increase for the year ended is a loss. And it must be debited to the profit and loss account, or it must be treated as income in income statement. And if that doubt decreases, maybe somebody we are doubting cannot pay us 1,000 naira, one day walk in and give us 200 naira. That means the person's debt has reduced, Abby.
Yes.
That reduction or that decrease in doubt is a profit. And it must be credited to the profit and loss account or added as an income in the income statement of that organization. So that's why you saw here increase in provision for bad debt. Look at the additional information later. D, you have provision for bad debt increased to 830.
Yes.
So there was 700 in the trial balance. There was 830 outside the trial balance. Remember, profit and loss account or income statement for the year ended does not take transaction meant for the past. So the current one is 830 minus 700, which is 130 naira. Is it clear? The 130 is that increase by. There is difference between increase by and increase to. Increase to is 830, have you?
Yes.
Increase by is 130. And it is that increase by that represents an expense that must be debited to profit and loss account or included as expenses in the income statement. Is it clear?
Okay, good. So let's assume now this D was provision for bad debt reduced to 500.
Good. We'll now say 700 minus 500, have you?
Yes. No, 500 minus 700.
Right.
In that
case, 700 minus 500, we'll now write 200. That 200 is decreased by. Hello? That 200 is decreased by
Buy. Okay,
The
decrease by.
500 is decreased to.
Okay.
Is it clear?
So we are going to put that one in the income side, Abby.
Yes, that 200 will be in income side. But for now, this one is an expense and it needs to be kept at the debit side of the profit and loss account. So, is it clear?
Yes, sir.
Good. The next thing, according to that, what is it called? Insurance, Abi? Insurance is an expense. Insurance is what? An expense. And because insurance is an expense, you debit. You debit the profit and loss account, or you include it as part of expenses in the income statement. And the insurance has a prepayment, Abi. Prepaid or prepayment.
Prepaid expense.
Or advance. All these names are all the same. This one does not have too much name. You know, people don't like paying advance. They like when they finish using the pay. So this one is prepayment or prepaid or advance. If you have paid your tuition fee to the end, that means you are paid in advance, have you? And when you pay in advance, remember, for you, it is an expense, have you?
Yes, sir.
Paid in advance. So the school is an income they have received in advance. Remember that they have collected their tuition fee, if you have paid, and they have not concluded the course, have you?
Yes, sir.
So that means it's income in advance. And expenses in advance is current assets. Current assets. That will be in the financial statement. This one is current liability. So not all prepaid are assets. There are two versions: income prepaid or expenses prepaid. But as far as prepayment is concerned, prepayment means you are paying now for tomorrow, for future. Is it clear?
Yes, sir.
And income statement does not take past. It does not take future, only now. So because that money you paid now for future belongs to future, we always subtract prepaid. Is that okay?
Sorry, can you come again?
Because what you paid it for now. You paid it now, but it's for tomorrow, Abi?
Yes.
That's the meaning of advance. And when you pay for tomorrow, profit and loss account or income statement does not accommodate past or future. It accommodates now. And that is why prepaid for the year ended will be subtracted. Is it clear?
Yes, sir.
So you see me write insurance in my textbook there, 290 minus 54.9. And that one has gone. The next one was rate. Rate was 400. There was also prepaid, 96 naira, Abi?
Yes, prepaid 96 naira.
Letter E, adjustment.
Yes.
We also subtracted. The next thing, the question was motor vehicle expenses. Take note, there's even between motor vehicle at cost and motor vehicle expenses. I hope there are two things.
Yes. But for that, motor expenses is different from motor vehicle at cost. Yes. What's the difference? What's the meaning of this at cost?
You know, accounting, they accommodate past and present. When you buy an asset for an organization, you record when it was bought, Abi?
Yes, sir.
And that means at cost, the cost price of that asset. That's mean at cost, the cost price, the real value of the assets. You are not looking at depreciation and so on and so forth. before you get what we call net book value. Net book value, which is a kind of taking away depreciation from that asset at cost to give us net book value. So we're talking about these assets at cost. It's not at net book value. That was the real value that the assets was bought. Is that clear?
Yes, sir.
Then this one is motor vehicle expenses. You could be driving on the way. Your tire got,
punctured.
PS or puncture. You need somebody to repair it that they've organized, have you?
Yes, sir.
When you repair that car, that's motor expenses, have you?
Yes, sir.
And that's an expense that must be debited to profit and loss account or added to the income statement of the organization. Is it clear?
Yes, sir.
So that's why I wrote here motor vehicle expenses 925. There was no adjustment to that. After motor vehicle for advertisement, advertisement should be a loss, have you?
An expense.
An expense. So we have to debit. Bad debt. The word bad debt is different from provision for bad debt or provision for doubtful debt. Are you following?
Okay.
Bad debt is that kind of debt that cannot be recovered within one accounting period. It's not that cannot be recovered forever, no. There are times somebody will owe you. You could not pay. There are two types of debt. One is good debt, one is bad debt. I mean, is that bad debt we record? If it's good debt, we will collect our money, go chop Navi.
Very well.
But bad debt is one we record that somebody has not paid. For one reason or the other, we talk to the person over and over, and he could not pay. Then that debt will become bad. And when a debt is written up, bad debt written up, it's an expense, and it must be debited to the profit and loss account or added to the income statement of the organization. You can see right bad debt 247, have you?
Yes, sir.
There are discounts. The first one is discount allowed, which is an expense with debit. Second one is discount received, which is what? An income. And there is something I believe we left. There was a rental income, which I have jumped. After advertisement, was rental income, have you?
Rental income. Yes, rental income, 820.
Rental income is an income. It's very clear. It should be at the credit side of the profit and loss account, or it's part of income in the income statement of the organization. So automatically, I put rental income, but there was an adjustment. The rental income owed by, this is owing. And this is a very good example of income owing, Abi. And all income, all owings for the year end, there must be added. We have to add 380 to give us 1,200. Is it clear?
Yes, sir.
Then we also look at additional information to be very clear. We have used A, we have used B, C has gone, D has gone, E has gone, but F has not been used, have we?
Provision for depreciation. But sir, before I forget, let me quickly ask this a question. This provision for bad debt, in the trial balance, I noticed it's in the credit side.
Yes.
But when we want to enter the adjustment, we entered it in the debit side.
That one, what we enter into the profit and loss account does not align with trial balance. But one thing you need to understand is that trial balance record transactions, like I've told you, debit side of your trial balance, debit records assets and expenses. Debit side of every trial balance must have assets and what? Expenses. While the credit side must have liabilities and income. But one thing about this subject is that, or this course, is that there are some transactions in this subject in accounting that does not belong to the four I have just mentioned. Those transactions, they are not assets. They are not liabilities. They are not income. They are not expenses. Are you following?
Yes, sir.
Alright, I have told you now that if it's assets and expenses, it should be on the debit side of the trial balance. If it's liabilities and income, It should be at the credit side of the trial balance. But these transactions are not income, they are not expenses, they are not assets, they are not liabilities. Those are the exceptions in the trial balance. One of them is drawings. Drawings is not an asset, Abi?
Drawings, no.
Drawings is not income. Is it income?
Drawings is not income. It's not it's an expense now.
How? Somebody went to the boss of the organization, take money, and use and go buy a shed. Is it in the interest of the business?
It's not the business, but the business
Is
lost
it
money now.
Eh?
It's not business expense, but it's a loss of funds.
But it's not loss, so the fund wasn't lost. It's called drawings. It's not an expense. If it's an expense, we're going to put it in the income statement now or profit and loss. Is it there?
No. So where you go?
The balance sheet or the financial position statement of the company. Okay. So as far as what the person uses does not promote the company, it's not expenses. Is that okay? So yes, that's why it's called drawings. It does not fit in. But double entry requirement, drawings are always debited. Because when you prepare cash book, drawings are credited to the cash book. When you are posting to ledger, for every credit entry, drawings account will be debited. And that is why it's debited to the trial balance. Is it clear?
Yes, sir.
Another one is returns inwards. Another name for returns inwards is what?
Returns inwards.
Another name for that.
Another name for return inwards.
Is what? That's not what returning inwards. Is that never starts?
Sales return.
Are we doing it today?
No.
Maybe for that
time not like 19 days.
But it's still far.
Far.
So many things can be done. So many things can be done within 19 days. Am I correct?
Yes, sir.
You can read and still get an A within 19 days. It's possible. Except if you are at home now telling me I never reach, let me practice more, let me relax more. And person will say the thing no reach. Another name for returns outwards is purchases returns. Another name for returns inwards is sales returns. So returns inwards and returns outwards, they do not belong to expenses. They do not belong to income. They do not belong to assets. They do not belong to what is it called? They do not belong to returns, asset or liabilities. So, but the knowledge here is that returns inwards, in line with double entry requirement, inwards are always debited and outwards are always credited in the trial balance. And one more thing is the provisions. All provisions, whether it's provision for bad debt or provision for doubtful debt or provision for statutory reserve or provision for depreciation, the double entry allows them to be credited. Those are the 4 exceptions. Drawings, returns outwards, provision for anything. So with those 4 are the exceptions.
You said that the double entry allows them to be
at the credit side and debit side. Inwards are always debited. Inwards are always debited. Outwards.
You mentioned something about provisions now.
As if all provisions are credited.
All provisions are credited.
All provisions, whichever kind of provision it is.
Whether in the trial balance.
In the trial balance.
Okay.
All provisions in the trial balance of the credited. The double entry puts them by that. Provision for depreciation must be credited in line with double entry principle. Provision for depreciation must be credited in the trial balance like that. Is it clear?
Yes, sir.
At least I've given you formula on how to extract a trial balance, Abi.
Yes, sir.
When I send you that question, you can do it very well. We move. This one, depreciation. This is provision for depreciation. There are two depreciation in that question. One is in the trial balance. One is outside the trial balance. Provision in the trial balance represent depreciation in the past. And income statement or profit and loss account does not take depreciation in the past. Doesn't take things in the past. It's only current. The current one is the one outside the trial balance. Is it clear?
Okay.
So provision for depreciation is 10% on cost, which is a kind of straight line approach. Motor vehicle at cost is 27,000. Did you see that?
Motor vehicle on cost.
At cost is 27,000.
You said that this one is a straight line method.
Whenever they say 10% like that, it's like a straight line approach. But that is in percentage form. Is that okay?
Okay.
But that was the formula we had. It's a difference in time. But when it's 10%, it means 10% of that should be the value. And that will be our depreciation throughout the period. It will not reduce, Abi.
Okay, yes.
So 10% of 27,000 is 2,700, Abi.
Yes, 2,700.
So motor vehicle is 2,700. But there's another one, office equipment, 10% on reducing balance, Abi.
I'm coming. 10%. You said 10% on reducing balance. Yes.
Yes. Whenever they say reducing balance, it means that the assets at cost will be reduced by its former depreciation, and then we'll calculate 10%. Watch you. Office equipment at cost in the question is 10,500. Have you?
Yes, sir.
Now,
10,500.
provision for depreciation in the trial balance for office equipment is 2,650. Have you?
Wait, to.
Is in the question.
Depreciation. Oh, yes, 2,650. Yes.
Yes. So you read, because the question has mentioned reducing balance, you reduce the original cost of the asset by its former depreciation. What remains will now find 10%. Let me subtract this. 10,500 minus 2,650.
10,500 minus 2,650.
Yeah.
7,850.
7,850. Now, we'll now find 10% of this to give us the current depreciation, which you know is 785. Have you?
Yes.
So that's what we debited to the profit and loss account or added to the income statement of the organization. So we add all income. The total income is 37,365. The total expenditure, which is addition of 10,314 down to 785, take it away from the total income. We have a net profit of 20,830. And that marks the end of the income statement with a net profit of 20,830. Is it clear?
Yes, sir.
Now the balance sheet or the statement of financial position, which you can turn the way you want, the fixed assets or the non-current asset will start first, and the finance by will be down, and you do it that same way I explained to you. For this one, we have assets or fixed assets or non-current assets. We have freehold property in the question. That one does not have depreciation. We have 52,000. Motor vehicle. Why not look down? You see down the notes. Are you seeing notes?
Yes, no, depreciation was calculated as follows.
10,300 in the trial balance as provision for depreciation for motor vehicle, plus the current one of 2,007 in the income statement will give us 13,000. So we less depreciation 13,000. We have 14. Office equipment 10,500. we add the 2650 down there. You can see it in the textbook there, the way I have explained it in my textbook. 2650 plus 785 to give us a total of 3435. Is that okay?
Yes, sir.
And that gives us 3,435. Now, and that's all we left. And we have office equipment gone. Now, I want to show you something. What you see in the textbook here, we have arranged the non-current assets or the fixed assets of the case to be. It's the old method of preparing a depreciation. Is that okay? Or preparing fixed assets. But this is a current method. If you like that one, you can use it. You have cost. You have depreciation, which we call accumulated depreciation, ACC. And you now have NPV. Is that okay?
Okay.
That means that place I wrote fixed assets. I can, after writing fixed assets, I will now write cost, accumulated depreciation, and NPV, and put naira on top of the currency involved. Now I will now write freehold property, Abby.
Freehold properties, yes.
I will write here 52,000. I will now put that share. I will now write 52,000. The next one is motor vehicle. I'll write 27,000. I'll write 13,000. I put in bracket, Abby.
Okay.
I'll now have 14,000. I'll now have office what equipment. I have 10,500. I will now write 3435. I close it. I have 7065. I'll add all this. Let me add that side.
Okay. 52,000 plus
52,000 plus 14,000 plus 7,065. What do you have?
73065.
73065.
So
this one
so
will
I can
be
put
16,000. Yes, I can hear you.
I said, so if I'm writing it in my note now, I can write cost, accrued depreciation, MPV.
And then MPV. If you don't like this one.
Under them, I'll write naira sign on each of the three of them.
Yes, so write naira sign on top like this, so that we all know it's value is naira. So here is add this one, 52,000, 27,000, 10,500. What do you have?
27,000 plus 52,000 plus 10,500, right? That's equals to 89,500.
You can see that cost, I closed it, Abby.
Which?
Hello?
I can hear you, sir.
I closed the cost. I closed the accumulated just to show. Already we also showed it in this one, but it's just that there are two methods accepted. You can use this or use it. All of them are still another. This one I just use now. This is the new method. This is the old method. But whichever method, none of them is bad. It's just that one came before the other. And that is what. Now this one will not be the 73,065 that I'm going to add to the current assets, Abby.
Yes.
So, and then the balance sheet will agree. So, current assets, I have to put all those things. One of them is stock. Rental income owing. I told that income owing is current assets. Prepaid expenses also current assets. Debtors, look at that debtors. You write debtors 12,642. You now less provision for bad debt. That provision outside the trial balance is what I list. On the right-hand side, it should be finance back or capital. Balance or capital invested, which is 74,053. And the net profit will go from the income statement. There was no drawings in this question. Are you following?
Yes, sir.
That's because there was a serious discipline. Nobody took money for his own personal purpose. The next thing is current liabilities. We have creditors. Accrued salary, which is expenses owing, which is part of current liabilities. The two sides will agree. So you can also use that same method. But one more thing to remember. Every transaction in the trial balance must be used once. How many times?
Once.
That one simply means once in a trading account, once in a profit and loss account. That means the two accounts that make up the income statement, it can appear in them once in trading, once in profit and loss. Then once again in the balance sheet, which is the statement of financial position. Then every transaction outside the trial balance must be used twice, because they are fresh transactions that must go through double entry principle. They must be used twice. And that twice could be, for instance, closing stock. Closing stock will be in the trading, which is a stock. And that stock again will appear in the balance sheet or the statement of financial position, as the case may be. And that is how you prepare, or if you check very well, everything appears to check. That is that the profit and loss account to get the
net, yes, increase, yes.
Use it in the balance sheet. Is it clear?
Yes, sir.
So we can categorically tell you now that we have prepared, we have taught you how to do accounts for sole proprietorship or sole proprietorship account has been done. Is it clear?
Yes, sir.
That's your course outline. So I'm going to send you a question that you are going to prepare for me. You will extract a trial balance first. You will prepare trading profit and loss account or income statement, and then balance sheet or the statement of financial position as at whichever date. Is it clear?
Yes, sir.
I can say that we are done with that. We'll just give you a question which you are going to try to know whether you remember.
Whether I can catch. Please, you also send me this recording.
Yes, I said.
I said this recording will also help, so that anyone that I didn't get, well, I'll go and replay it again.
It's recorded. So let's take one more topic, then we'll close for today. Is it okay by you? Or you are closing already?
Which topic are we taking?
Bank reconciliation statement.
Maybe I have a meeting that I need to catch up with. Let me just close here.
No.
Yes.
So yes, that means that's all we can possibly take for today. Okay, until some other time, we'll continue. So
tomorrow is Thursday. Will you be free tomorrow?
We can still do tomorrow. Just let me know when you are ready.
Okay, I'll check
like we did today.
Okay, I'll check through my schedule this night. Then I'll send you a message.
Okay. Yes, on that note, God bless you.
Thank you very much, sir.
You're welcome.
Thank you, sir.